Hey, it is Friday, June 17th, 2022. We've got a lot of news to get into. The big housing market news is basically an announcement from the head of the central bank, Jerome Powell, that the housing market needs to and is going to undergo a reset. Let's take a look at what he said. We've got some other housing market news to get into and some other broader economic news to get into after that. But here's my take on it. And this wasn't very widely reported, but the Fed plans to reset the housing market, raising the likelihood of falling home prices. Let's take a look and get into what this means and what are they talking about when they say reset the housing market. Now, Jerome Powell's comments were put out there on Wednesday when he was taking questions, and here's what he had to say, quote, "We saw home prices moving up very, very strongly for the past couple of years. So that changes now, and rates have moved up. And we're all aware that mortgage rates have moved up a lot. And you are seeing a changing housing market. We are watching it to see what will happen. How much will it really affect residential investment? Not really sure. How much will it affect house prices? Not really sure. Obviously, we're watching that quite carefully. It's a very tight market, so prices keep going up for a while, even in a world where rates are up. So it's a complicated situation, and we watch it very carefully. I'd say if you are a homeowner, somebody or a young person looking to buy a home, you need a bit of a reset. There's the key word, reset." He continues, "We need to get back to a place where supply and demand are back together and where inflation is down low again and mortgage rates are low again." All right, so let's talk about what he said. He used a lot of very vague language there. First, he said, basically he summed up that affordability is very low right now, especially for young entry-level home buyers. But then he went on to say that inflation needs to come down. But think about that. Inflation coming down doesn't mean home prices are going to fall. It just means that the rate of increase, the inflation, is not as much. So instead of 20% year over year home price increases, you're now only going to see what, 5%, 10%? What does he mean? So inflation coming down doesn't mean deflation. It just means inflation is not as high or not as bad as it once was. So he's not even saying home prices are going to fall. Now, should we base our every investment decision on what this person says? Of course not, because they've been wrong so many times. Look at the call for transitory inflation. That's just one of the many examples of the quote-unquote experts getting it wrong. But the fact that he's calling for a housing market reset should at least raise a few eyebrows to what's happening. Okay, so now enough of the chatter on what's being said, which is just a lot of times hot air. Take it for what you will. With the track record of these people, I wouldn't put too much weight behind what he's saying. Well, let's go ahead and take a look at the numbers and the data and what's actually happening in the housing market. Recent numbers here. First, let's take a look at rising inventory, the latest data out of the Fed. Now, this is for new homes, so this could be quite different compared to existing homes. And we know that new homes only make up about 15% approximately of all homes that are sold, but we are seeing a pretty big spike in new home inventory, and this is months of supply. And if we go back, we're at about a 12-year high. We have to go back to 2009, so nearly a 13-year high for new homes on the market. And this is months of supply, so this factors in how fast homes are selling versus the number of homes that are for sale right now. And if we look to the far right here, we'll see that we're at about a 9-month supply right now of homes on the market. And this is because of the significant slowdown in home sales because of the rising mortgage rates. And if we zoom in here to a 10-year chart, we get a clearer look at the recent spike in new homes for sale and this rising inventory. But now let's take a look at existing homes, and is the inventory also rising for existing homes? Now we're looking at Realtor.com. If we look at the yellow line, that is for this year currently, the month of May 2022, the most recent data. And we did see the line cross last year's. So now we're seeing things shift more towards a buyer's market. Does it mean that it's crashing? No, it's very gradual. The housing market moves very slowly, but at least we're starting to see an uptick, and now we're up 8% year over year for existing homes for sale on the market. But if you look at the data going back several years, and this is the other lines right here, we see that we're still way below active listings compared to previous years. So inventory is still very, very low for existing homes. Yes, new homes, that has jumped up to a 12, 13-year high, but existing homes, not so much. And we know that most new home buyers, entry-level buyers, young buyers, typically buy a existing home or a home that someone else had owned previously before they can afford a new home. So this, to me, is a more important chart and more important data to look at. And another data point that we need to look at is days on the market. If we look at the yellow line here, we see that the days on the market is still much lower than it's been over the past previous 5 years. So as far as a home price correction and a housing market shift or reset, as Jerome is calling it, we're definitely very far away from that. Also, this may be a shocker to some of you. Median listing prices are still rising as of May. May's data, we're still up 17% year over year, and that's a bigger surge in prices even when looking at the past 5 years. So again, the people out there calling for a housing market crash, they might just be trying to get attention. They might be trying to just do to click on their videos, what you call clickbait. This is the real story. Now, this month in June, we are seeing asking prices starting to come down. But again, it's not a crash. I don't think we're going to see a crash. I think we're going to see a correction, especially in some cities like Boise, Idaho, like Austin, Texas. Those will be probably the first cities to see big price decreases. We're also seeing year-over-year price declines in cities like Chicago, but we're yet to see a broader price decline where the overall median price nationwide comes down. We may see that later this year, but this is still going to take a while to play out. There's still a lot of money, a lot of whales, a lot of big investors on the sidelines coming in and buying these homes. For there ever to be a real housing market crash, there has to be a lot of things that change and a lot of laws that need to change. For example, you need to restrict companies from buying so many homes. For example, if they passed a law that said each person can only own one home and each company can only own 20 homes, then you would see a major price correction to the downside, because 1 in 3 homes now are bought by either investors, companies, or even individuals buying them as investment homes, second homes, vacation homes, etc. Right? So this is in hands of the policy makers. This is in the hands of the policy makers as far as what types of actions still are allowed in the housing market. Oh, by the way, do you guys like my flowers? My wife said I need to spice things up a little bit. And actually, another quick side note, thanks to your support and your help that you've given me down with the super chat button and just you viewing these videos, I'm going to be getting a new camera. And that's because of you, the viewers. Thank you very much for keeping this channel operational. And I'm going to be getting a new camera so I can do more out and about stuff. My other camera footage was kind of shaky. So I've got a nice camera that I've got on order. It's going to have a stabilizer and a lot of nice stuff. So thank you again for helping this channel stay alive and for growing. But let's get into some more news here with this economy. Now let's shift over to retail. And what's been announced recently is that Samsung has cut in half their imports of products into the United States. Now Samsung is actually the seventh largest importer into the United States, and this is because of the rising inventory that we see so many retailers talking about. Target, Walmart. What they did during the shutdowns and the pandemic scare is they stocked up on as many goods as possible because there was a lot of uncertainty at that time as to the supply chains. So what they did is they ordered as much as possible. Nobody knew how long the shutdowns were going to last, how long the health crisis was going to last. So a lot of these companies are overstocked right now, and we're starting to see shipping rates come down because of the supply demand has also come down. Hopefully we will start seeing the cost of goods and products on the shelves start coming down as stores need to move out all of this excess inventory that had been stocked up during the health crisis. And just at the beginning of the year and more recently in the second quarter, we saw Target and other stores make these huge announcements. And now we see it carrying over to the number of shipments that we have coming here to the US. Now, will we see similar announcements from other large importers? Now, if we look at the chart down here, we see that Samsung is there at number 7. They just announced a halving of their imports. But the bigger ones, the biggest one actually, Walmart, Target, Home Depot, Ashley Furniture, Lowe's, and Dole Food. We'll have to see if we have similar announcement out of those companies. But I wouldn't be surprised if we did. Now, I know many of you tune in for the direction of prices, from automobiles to goods and products to homes, of course, real estate. That's a big one. So the retail sector and the cost of items and goods could be the area where we start to see prices come down first. I really hope so, barring some other crazy event or shutdowns or a health crisis 2.0, 3.0. I think that could be very likely the place where we're going to see prices come down. Hopefully real estate and automobiles, cars and trucks. After that, of course, we're going to keep an eye on it here for you. Thanks everybody for your support. We will see you this weekend. Happy early Father's Day to all fathers out there. Thank you very much for being here. Big love to everybody. Keep stacking. Stay safe. Talk to you soon. Bye now.